Not a surprise the way things have been going. We fall again. 210,000 is the number for last week. Continuing claims are down, at least compared with the initial report last week. I don't have the revisions yet, but 1,807,000 compared to 1,811,000. The Philadelphia Fed Business Index comes in at 3.2, which is down from 5.2, but better than the negative 2.5 that was expected. Prices paid in the Philly Fed 3.7 versus 16.6. So I assume that the folks at the Federal Reserve will be happy about that and the idea that maybe prices are going down. Here's the revision. So last week was 212, up from 209. So we fall to 210, and continuing claims were 1,803,000. So we rise a little bit to 1,807,000, but really no change in the labor market. So Jay Powell's labor market is still good, and the latest indication we have on any prices is not bad.
So not much news here. So let's go back to yesterday. Let's go back into the news conference. You're there in the room. Chairman Powell's talking about evidence of being sufficiently restrictive, and he points to the labor market. When he did that, what were you thinking?
You know, it's kind of how you look at it, is how I was thinking. You can look at it. It's a little hard to argue flat when it's as round as it is. There's still a lot of tightness in the labor market, which he sort of admitted by saying that the JOLTS numbers have come down, not as far as they were pre-pandemic, but they have come down, and the unemployment rate has remained low. So they're still looking at that as okay, which gives them permission to essentially sit with rates higher for longer.
Were you surprised that Jay Powell didn't have a clearer answer to this question of the tension between higher projections for GDP, higher projections for inflation, but the same number of rate cuts this year?
No, you know, it's difficult for him. It would be difficult for anybody to square that circle. So you kind of knew that he was going to have a hard time doing that. I think what you do is you sort of look under the hood of what happened at the Fed, and it was that everybody basically moved up, but the bottom people moved up into the median. And so at this point, that doesn't change, but the general feeling among the committee is that there is a good chance that they might go to 2, depending on how the numbers shake out. I thought one of the most interesting things yesterday was when Powell told us what the PCE core is going to be. 30 basis points, so 0.3%, which would be a good result for them. It would be down from the 0.4 that we have been seeing. So Fed staff are giving them some hope, I guess, that the inflation problem was just sort of turn of the year.
How unusual is that for him to leak data before it comes out?
Well, it's very unusual. Now, he doesn't have the data itself. He has the Fed's approximation of the data. So he's not really leaking the data, but they've gone through and done the math, and you can do that with CPI and PPI data inputting into PCE, and they're saying this is what we're likely to get. Now, you know what's going to happen next Friday. Nothing, because the markets are closed, but that's the day they release the PCE, and everybody's going to say Jay Powell was right or Jay Powell was wrong. So he's out on a limb there.